Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, making professional trading simple. Welcome to my Sunday afternoon video. So we had 4 days last week. We had Monday off, options expiration, and every day ran up. So what can we expect coming into this week? Well, we started looking at a bunch of charts this weekend, flipping through some information on the charts themselves and just looking at a bunch of different things that I do. And you know what? Boy, I'll tell you what, I was certainly more bearish on Friday than I am right now. If you're a bull, you're an institution, you have a lot of money, you're the one that moves the markets, you kind of control it all. We're just a squirrel trying to get a nut every now and then. And what would be the most logical thing for you to do? Well, who isn't bearish on the market right now? Lots of people are. Lots of comments about, the big crash is coming. I know some people are talking about this big wave three down, that type of doom and gloom. So the best thing for the institutions to do would be to run this thing up. Would be to continue to run this thing up and really start to spook the bears and maybe make the bulls start to think that they're back in charge. Then go into a pullback. Now, where that pullback will go is really what we need to be watching into the next move. Will it go down? Yeah, it's going to. I fully expect that sometime this week we'll see some sort of a pullback. Am I convinced that it's going to be the wave three down? No. Could it? Yeah, bet you anything could happen. But I have to just be careful because I just play what the charts are telling me. And right now we are still bullish in the short term. We are still bullish. I'm waiting for some more confirmation from the bear side, but nothing that we saw last week was necessarily bearish at all. So we're still looking at some bull activity in the markets. It would not surprise me at all to see this thing maybe sneak its way up or sideways the next 2 days. If we go sideways, that's not good for the bears. I think, from a bearish standpoint, I would much rather see it go up than sideways. That consolidation usually leads to a little bigger pop in the markets once that happens. So futures aren't open, so I have no clue really what's going on right now. But let's watch these overhead levels. And right here is where we stopped, right about this 10,425. A breakup over that brings us back to the 10,500 level, which you can see clearly here on the daily. That would be and should act as very strong overhead resistance. Now, does that mean that's where we retreat? No, but we should see at least a stop, a pause, a break, something at that point. That would be very bullish to just bust through that and close over that for the day. So watch that closely coming into next week. This 10,500 area should really act as a good, strong overhead resistance on the Dow. From a NASDAQ standpoint, you can see us following this line, which we have been for quite a while. Not really able to break above it and separate ourselves from it, and not really showing us any bearish activity to the downside. If we can get back below this 1800 level, that would be a great start from a bear standpoint because we'd start to break the 20 and the 200 period moving averages on the 60-minute charts. Ultimately, this is what I'm looking for. I'd love to see a break of this lower line here. That would accomplish quite a few things. A, it would get us below this lower channel line, and B, it would clear all three of these moving averages. That would be very strong from a bearish standpoint. It just feels, the momentum is definitely running out here, guys. Just feels like a rollover is coming. So be aware, be watching for that closely coming into early next week. It might possibly, man, if I'm being optimistic, we might be able to squeeze a few more bull days out of this up into Tuesday afternoon or Wednesday afternoon, maybe. Completely speculative on my part, really. But based on the movements that we've seen, I would think that maybe that would be as late as we could make it, Tuesday or Wednesday afternoon, before we started to see some sort of a move down or a pullback, at least in the markets. NDX on a daily, you can see it coming right up here, closing twice above this 50-day moving average. This is what still got me quasi-bullish in the very, very short term on this market. We've cleared the 20, we've cleared the 50. We've stayed above it for a couple of days, so I could maybe see another push back up into this area, maybe back up into this little area here in the 18, like I said, 14 to 1850-ish area would still be my bigger overhead resistance area for this little push up. Here on a weekly, we had a doji couple weeks back that turned into a reversal doji. You can see us for 2 weeks now moving up. Uh, Volume looks anemic. And I mentioned this on Friday, but I forgot to mention that we have to remember that this was a day short, too. We didn't trade Monday. So we're working on 4 days worth of volume as opposed to 5. I don't know if it would have made that big of a difference. We still would have, I still believe, ended up with smaller volume or maybe equal volume compared to the week before. I don't think it would have made that big of a difference. Regardless, so keep in mind that this volume bar is based on 4 days, not 5 days of trading. So we are up to this overhead resistance here, looking for that to hold maybe by the end of the week. Once again, this is a weekly candle, so I do not mind if it pops above it a little bit. I'm more interested in where it closes for the week. So we might see it pop above it, like I said, Monday or Tuesday, and then maybe start to slide its way back down Wednesday, Thursday, Friday to finish back below this. That would make for a very interesting look on the weekly and would certainly start to get me a little bit more bearish than I already am on the markets themselves in the longer term. SPX on a 60-minute, you can see it breaking above all these overhead resistances. Once again, if we can get back below the 20 and the 200, that's a great start. And that would be somewhere below 1100. Look for this, maybe this overhead trend line to hold on the way down. That's going to intersect at 1100-ish, I guess, probably, by the time we get back down to it from a candle standpoint. So be watching for a break of this 1100 area on the SPX. Now, obviously, where I want to get below is not only is 1085, but really, I've seen a lot of extra support coming into the market right between 1075 and 1080 as well. So this 1075, 1080, 1085, all of this area is going to act as very, or should act as very strong support down here. So anything below 1085, next level's 1080, then 1075. For those of you that are more conservative, once we get down to the 1085 area, you'll want to be very careful between 1075 and 1085. Break below 1085 would really be a pretty damaging blow for the bulls at this point. From a daily standpoint, you can see that we are up above that 50-day moving average, coming in on this overhead resistance at 1115. So 1115 is still my next area of overhead for the SPX. And maybe 1115 to 1118 if I want to stretch it a little bit. I certainly would give it a little bit of room. Anything above that, then I'm looking back at this 1130 mark, and that should be, boy, it would be very bullish if it actually managed to get up this high and break above it. So watch this move this next week into these overhead areas, especially above 1115 to 1118. Could make for some strong overhead resistance on the SPX, and very possible to get there. If we can crawl up 3-4 points Monday, 2-3 points on Tuesday, we're there. That's 1115 to 1118. We're right in that area. So be watching that closely. From a weekly standpoint, we did reverse, come back up, overhead resistance, same thing. I'm more concerned of where we close rather than where we go. So if we move up a little bit, that's fine. Not too worried about it. It's where we close by the end of the week. VIX on a daily, fear. What fear? So investors right now aren't scared of much, so they're certainly not feeling the effects of this move. They're not scared of anything. You can just see the volatility just absolutely drying up here in the VIX. From a weekly standpoint, same type of thing. We had for about 3 weeks, we had a really nice bull pullback going on here, getting a little bit deeper than where I would have liked to have gone to see it as a bull pullback. But watch this level underneath here. That might find some support for the VIX. Ultimately, a break of that probably takes us right back here to the bottom, with the same point being no fear in the markets. They aren't scared at all. Apple on a 60-minute. Continue to watch this one. This one looks, it's kind of consolidating here. So from a